So in video one, we looked at reading candle behavior to get into high probability swing trades. In series two, we looked at execution. How do you actually execute your swing trades? Now we need to tie it together and bake it into your daily routine so that you can take advantage and actually spot opportunities as they develop in the market. So what we're going to look at is execution windows and how this gives you so much control over when and how you trade. So the definition of an execution window is a fixed point in your day. In our case, if you're going to use the 12-hour for your execution, where a 12-hour candle closes, a new price structure is confirmed. So you review, decide, and act at the close of those two 12-hour candles, then walk away until the next window. This means 12-hour candle prints twice a day. So in the UK, it prints at 10 a.m. and 10 p.m. In the US, say New York, 5 a.m. and 5 p.m. So they're the two times in the day where we get new price action that we can review and make decisions based on. So it means that we only need to check the charts twice a day, or sometimes even once a day. Might be you just want to check at 5 a.m. if you're in New York, or 10 a.m. if you're in the UK. You do that every day, you bake it into your schedule, and as you get better and better at this, you can do it in 10, 15 minutes and it's done. The result, you have more time freedom. Of course, you can then use this to drop down into the lower time frames. So if you see strong price action on the 12-hour, you can then say, okay, I want to look at this on the 4-hour. So we get a close at 10 a.m. I'm going to check again at 2 p.m. and at 6 p.m., for example, in the UK. Just the next 4-hour increments to see, is price action developing in my favor? The whole point is designing an execution window around your lifestyle so that you can carry on with your job or spend more time with your family. Whatever it might be, you don't want to lock yourself on the charts. You just want to be able to come in, review, decide, act, and walk away. So my typical daily routine is I'm just opening my trading list. I already have my 32 pairs, so they're here. Have everything set up on a dedicated list, and you can set this up very easily on TradingView. So I don't need to worry. I have everything ready to go. Gold, silver, Euro USD, GBP USD, Euro GBP, all the JBPY pairs. So I can literally scroll through each pair and see, is anything happening on the 12-hour? If so, why is that happening? Is there anything that I need to be aware of to actually place a trade? So it just starts to look something like this. We analyze our higher time frames, monthly, 2-week, weekly. And again, when you're actually marking new behavior, you only have to do this once a month, once every 2 weeks, once a week. Then you check your live candles, you drop to your lower time frames. The 2-day, the daily, how are they reacting or closing? Are they in confluence with what you've marked as your higher time frame targets? Then analyze 12-hour price action. Is it confirming? Is it in your favor? Where's the internal range liquidity? Once you know all those things, you can set your orders and walk away. And that's the beauty of using the 12-hour. If you then want to do lower time frame refinement, you just wait for your next time frame to close, move back to your new execution window and make a new decision. But that is your choice. So the benefits of swing trading: time freedom, financial freedom, control over your life. This is meaning that you're getting defined time for review and decision making. You're minimizing screen time. You're minimizing chart time. This works in any time zone, and it just removes emotion and it scales with your life. So let's actually look at gold and what we saw a few days ago, which meant we could easily take a setup. So this is the type of analysis that I would do. I see monthly bullish candle. So in the next month, I'm anticipating continuations towards the previous month's high. 2-week time frame. Let's imagine that this candle was yet to print. Let me just do this end to end. So we have, again, a bullish candle close. So the 2-week is aligning with the monthly towards this target. On the weekly time frame, let's imagine that these candles hadn't yet printed, okay? Because we have the monthly and the 2-weekly confirmed. Then we're looking for timing on the weekly. So price is against at this point. We have here a sweep, so we can mark that. So you have weekly breaking out and closing inside previous weekly candle range. So the draw on liquidity is first down on the weekly time frame. So we don't want to get into longs yet. So we're just going to wait on gold for the time being. What do we have? Well, we can look at the structure, the price leg on gold. It's sitting there. We have a weekly order block, weekly continuation. So we can now mark this, and this is where you can set up drawing templates. So I have everything marked up. Weekly order block. So the weekly order block, I just click that, and I can see then I have a defined level in the market that price may want to trade to. We also have the fair value gap, the bullish fair value gap. So price liquidates the target. Okay, I just go down onto the 2-week time frame. Okay, so now we have a 2-week sweep again. So you can see that you don't need to mark absolutely everything here, but I'm just showing you that it's possible. We have two-day turtle soup. So I said 2-week, I meant 2-day. So we have the 2-day rejecting and closing inside this previous candle. So the 2-day is aligning with that hypothesis. And crucially, we've mitigated the weekly order block. Okay, daily time frame, we have this sell-off and shift. What do we then get? Okay, we have a daily order block. So we can mark that as our daily order block. There it is. So we have price raiding a weekly bullish demand zone, an order block. We have higher time frame targets, and we have now a daily order block. We move on to the 12-hour. So when we're seeing this price action developing, this is not interesting because we just have sell candles. But as soon as we then get this shift here, we get the formation of a new 12-hour order block. We also have a bullish 12-hour fair value gap that sits right here at this level. So I'm not saying you need to mark absolutely everything in this way, but you can start to see how price starts to piece together. Then price retraces in and starts to move away. Now, what I always do is I always have my higher time frames on my chart, and this is something that we've seen in the previous videos. So we can see this being the closed monthly candle. Then we can see this 2-week price action starting to turn bullish. And this is essentially creating the lower wick of the monthly candle, which might now want to expand. Let's check the weekly just to reconfirm. We have, I'll take the monthly away just so you can see this, accumulation, manipulation, close inside the range, distribution. Where is the new 12-hour price action? It's right here. So I'll just move the daily order block just so we can clearly see this. We have 12-hour, retrace, 12-hour, and now we're seeing some consolidation or potentially bullish movement. New sell to buy, new order flow between candle 1 and candle 3. Here is the 12-hour fair value gap. So the next entry may be from the 12-hour fair value gap, covering either the liquidation or the weekly liquidation towards our higher time frame target, 2.2R. Now what I saw at this point here is as this was retracing, I didn't want to refine with the lower time frames. It's not something I typically do, but I was just more than happy to take that fair value gap. We have everything that we need, cover the low, target the high, 2.48R. Now whether this plays out or not, that's the logic. And it is so easy. You just wait for price to confirm, work down your time frames. Is there anything interesting? Yes, proceed. If not, skip the pair. And quite often, you just don't have anything to trade. For example, when we just saw this bullish price action, gold for me was just nothing. There was nothing there for me to take a look at, so I moved on. Silver, most likely exactly the same. And I just move down until I see something that is interesting. And that then means that I can move it from my trading list to my live list. And I just then track this. Is it an open position? Is it something I'm monitoring? Is it something that I have a limit order already set on? And then when I come in tomorrow, I can just see, did I get tagged in? What's the update on the position? And I just move on and get on with my day. So that's how you can start pushing this into your daily routine, making it something that you do every single day. And once you have open positions, you might think, I'm happy to see this play out before I look at new open positions. So actually, I don't need to review for the time being. I'm going to take a few days off. That's how you can start to think about swing trading, but always being in opportunities in the market in line with candle behavior and proper execution. So this is going to be the focus of this series, bringing this to life, making sure that you're making the right decisions at the right times. Because you might see 3 setups. Which one do you take? How many do you take? What risk to reward are you targeting? These are all of the things that we're going to start to break down. See you on the next video.